as you can see, Chris and I are being very subtle about who we're supporting on Friday at the opening match between Bafana and Mexico. But in the meantime, we're talking about maize and the outlook for the soft commodity. Chris, thanks so much for joining us this morning. We've seen that we've got volatile markets, obviously, globally, but on the white maize front, it's pretty subdued. Why is that?
Yeah, Sue, I think, good morning. Yeah, really nothing new. We've got this huge crop that's been harvested at the moment. And yeah, if you look at the SAVI, the South African Volatility Index that the JSE publishes for a number of its different derivative markets, and you look at the white maize particularly, that's around 25%, where generally we're trading at 35%. So certainly a lot less volatility in the maize market, and that hampered by the large supply of white maize that's coming off the fields at the moment.
Mm-hmm. Now that surplus, it's expected to be, or forecast to be, the largest maize crop in 29 years, but obviously that's putting some pressure on the futures contract, the July futures contract.
Definitely, you know, because of futures market, it's a transparent business where a willing buyer, willing seller will transact. Yes, there's definitely a damper on local prices. If you look at the July future trading just below 1050, 1,050 rand a ton, and if you look at where we were around Christmas time, 1,700 rand a ton, as we've had this great harvest, so prices have come down. Yeah.
And is that expected to continue until harvesting time in October, November?
Yeah, I think if you look at the planting season coming through ahead of us, definitely we can't see any huge price movements until we get rid of the surplus. I think that's where South Africa is focusing, saying, okay, we've got this 7.5 million ton white maize crop out there. What do we do with it? If we can get rid of it, yes, or if there's less plantings. So yeah, I think a lot of the market waiting for October, November. We'll also have a good idea on what we expect from a weather point of view, January, February, March, because we're such a rain-fed country. We will be looking to the weather charts come November, December again.
And just on that, getting rid of the maize, this is proving to be quite a problem, and we saw Transnet out this week looking for bidders to try and upgrade its rail system. Is this a major problem for South Africa?
Definitely. If we were far more efficient in getting product to the ports, and we're not going to mention any striking activity at ports, that always hampers issues, but if we were certainly more efficient getting that product to the ports, we could be moving product a lot sooner. Because look, traders now have to wait for the markets to fall further so that they can afford to actually be able to compete with the international market. So yes, if you look at South Africa, the great stadiums, Gautrain busy running again, there is definitely hope that we can deliver on infrastructure, but let's try and focus on that rail network.
Mm-hmm. And in terms of indicators for the next season, is it still too early to try and sort of ascertain what kind of a season we'll be having in terms of seed buy-up and also forecasts on rain?
I think as seed buy-up goes, definitely a bit early. A lot of the farmers out there, before they start with those purchases, just want to get the crop off. Some of them are still stuck in the fields because we've had a very wet season. So yeah, we'll have to wait and see on that. I think if we use the futures market as an indicator, July 2011, so next year we'll be trading at 1,200 rand a ton, is certainly higher. So the market already anticipating less planting, I would say, compared to where we currently are.
Let's just move over to wheat, because we have seen in April that increase of 250 rand in the price. Is this expected to sort of increase?
The wheat market, I think, certainly compounded by a lower international wheat price, which then has dampened the South African price. What we see is, yes, there's been an increase, but that was on the back of the first intentions by farmers. How much are they going to plant next season? So what we'll harvest in November, December, and that was 15% down. So the hectares planted, 15% less. So ultimately leads to less wheat being harvested in South Africa. So we did see a jump. We also saw a protection barrier, an import tariff, levied of around 140 rand for any imported wheat coming into the country. That lifted the domestic price, the local price. Now it's up to, with that increase, perhaps we'll see farmers planting a bit more wheat than their original intentions. But yeah, time will tell. The next month or so will certainly bring clarity in that.
And what does that mean for food inflation outlook?
Look, as far as the bread price goes, I think there's been a lot of focus around ensuring fair pricing. Remember, from our point of view, we're only trading the raw material, the raw bread price. So again, we'll be tracking international wheat prices. Yes, there is a slight damper with that import tariff, but I think that was necessary to ensure that farmers keep on producing wheat. Because, you know, food security is something that's crucial. You want to maintain a balance. You don't always want to be 100% reliant on imports. So, yes, there will be a general increase on the bread side.